and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I have 3 things that I wish to cover, namely an update to my portfolio, the topic of prediction versus preparation, and finally a service announcement regarding the monthly savings plan at Nordnet. So without further ado, let's start with a portfolio update. The first thing we notice is that my portfolio is down severely compared to last time. Since if we go to the portfolio values tab, last time I posted, the value of the portfolio was at an all-time high of $256,000. Now I am down $11,000 compared to that. So we are down to $245,000. So naturally, this is not very satisfying. But what is really satisfying is if we go to my favorites tab, namely the dividends tab, then we can see here that August has been an absolutely record-breaking month for my portfolio, since for the first time ever I have received more than $1,000 in dividends, and I didn't just receive a little bit more, I absolutely obliterated the $1,000 mark. So let's head into my Excel spreadsheet and look closer to the numbers. So what happened to the portfolio since I all of a sudden received such a large amount of dividends? Well, the major change between May and August here is that Activision Blizzard has paid out an annual dividend, and instead of paying out in May, this year they paid out in August, and it was increased as well, since it seems much more likely that Microsoft will be allowed to buy Activision Blizzard. We are still waiting for that. And then on top of that, I have done an investment into CVS Health Corp. So that explains the difference between close to $800 and all the way up to $1,300. And of course, there are some dividend increases on some of the other companies as well. But the majority comes from Activision Blizzard. And I mean, this is what you will see in a lot of YouTube videos, how to get to your $1,000 in passive income through dividends. And they tell you the easy ways of doing it. Well, you can see here on my channel, it took more than 2.5 years of dedicated work, and I started with a significant amount of capital, and this is not something that I'm going to receive every month. Next month, we are down to much more normal levels again. It's simply due to the fact that I have received so much in an annual dividend instead of having it distributed out over 4 times a year. And since we are now almost at the end of September, you can see that I've also received $260 in September. So naturally, all of this has of course meant that I have achieved some of my goals. So if we go to the goals tab here, then you can see that in August I hit goal number 39, number 50, 53, 59, 62, and 65. So 6 goals achieved in August alone. And then I have achieved goal number 41 of $1,800 in quarterly dividends. So 7 goals achieved within the time span of 2 months. This is absolutely absurd. Another way of viewing how absurd the dividend for August is by going to the forecast sheet. Since now that it has taken me roughly 3.5 years to get to $1,000 in one single month, if we look at the forecast here, these are all my records, and these are the predictions. This is just a simple linear forecast, but we simply have to scroll all the way down to August of 2026. So instead of having spent roughly 3.5 years, then I would actually have to spend roughly 6.5 years to get to this easy get rich quick scheme with $1,000 in monthly dividends. If we then go back to the overview arc here and scroll all the way to the top, just so you can see how each individual stock has been performing, then it's very clear to see that my portfolio has severely taken a beat, since currently I only have 7 stocks out of 19 which are in positive territory. Luckily for me, my biggest position, namely Activision Blizzard, which carries a little more than 20% of the weight of the portfolio, is in green, but otherwise I am severely lacking the market. My portfolio is more or less flat for the year when the S&P 500 is up more than 10%. So this leads me to the next topic for the video, namely preparation versus prediction. And I mean, when you look to my portfolio, it is very clear that I have no clue on how to predict the future, because if I would have a clue, then 12 of the companies in the portfolio should have been bought at a later time, since they are currently in negative territory. So all I can do as an investor is to try and prepare for what might happen, even though I have no clue of what is actually going to happen. So let me try and illustrate what I mean by preparation versus predictions. If we take an example where the economy has moved into a period of prosperity, that means that investors are thriving, which increase their capital base. Since they are getting good returns, then of course their capital is increasing. And since bad news is scared, the risk by investing seems to have minimized. If you can't remember the last time that you have lost on an investment, it seems like all investments have become more secure. This leads to risk aversion disappearing. If you can't remember when you or any of your friends has lost money from an investment, you feel that you are invincible, meaning that you actually are willing to take on more risk because you don't really think of it as a risk. Then financial institutions expand their business by providing more capital. Essentially, this starts a race to the bottom where banks compete for market shares by lowering the demand for return, i.e. lowering the interest rates, and by lowering their credit standard. This is just a way for me to put on more words on Buffett, where he says, be greedy when others are fearful and be fearful when others are greedy. Because if you have an example like what I'm showing here, this is exactly the time where everyone is greedy, and that is why you should be fearful. So how do I actually utilize this knowledge? Well, it is actually a bit more tricky than you think, since nobody will stand and ring a bell and say this is now the peak of the market, just like nobody will stand and ring the bell and saying this is now the bottom of the market. You simply just have to accept the fact that you will never get it exactly right. But if you are investing in individual stocks, then if you start to have thoughts like, maybe it's okay not to get this kind of return, maybe I can go with a little lower. If you start to think like this, then you really have to look into your discipline again and say, if I can't find an opportunity that meets my criteria, then maybe I'm better off with not investing currently and holding on until you find better opportunities. And then the question of course becomes, what is a good opportunity? Luckily, that is very individual. What you consider a good opportunity might be very different from what I consider a good opportunity, and that is why you have a market. So essentially what I'm trying to illustrate here is, I have no clue to when the economy will be in a prosperity period, just like I don't have a clue to when the next recession will be. I just know that the economy moves in these waves. So all I can do is try and prepare for whatever scenario I think might come. And one sentence which we have heard time and time again lately is higher for longer. What does that mean? Well, it means that the economists are expecting that the interest rate will stay higher for a longer period of time. And why is that important? Well, since the interest rate acts as gravity in the investment world, meaning if I can get 5% risk-free, why would I be willing to risk my capital to get a 6 or 7% return? Then all of a sudden I'm only willing to risk my capital if I can get 10 or 15% return, meaning that I need to get some kind of premium compared to what is considered to be risk-free. And if we just use my portfolio as an example, even though it only contains 19 individual shares, so this might not be the best example, nonetheless, you can see that my portfolio has declined over the last 8 weeks, roughly. Well, it shows that investors are willing to pay less, since if you can get a risk-free return, which is higher, and you can get that for a longer period of time, then naturally you are willing to pay less to buy shares in individual businesses. finally, the last thing that I want to mention is, if you have a monthly savings plan on Nordnet, meaning Måndesopsparing, then please note from the 8th of October, they will start to charge you a fee of 10 kroner per month every time that you do an investment. So if you're only investing 500 a month, then perhaps you should consider increasing that amount, saying that you will only buy every second or every third month, just to minimize the fee which you are paying. So that actually sums it up for yet another exciting week of the Lazy Money Game. So if you have enjoyed the content, then please consider leaving a like or subscribing to the channel. It really helps me out a lot. And until I see you next time, bye!